Surabhi, but I think we have the February auto sales data to focus on.
Absolutely. Not too many, bright stars, but yes, there are some that are shining like Mahindra and Mahindra. But let's dive a little deeper in those numbers and what this means for investors. We've got Kumar Rakesh, who is the analyst at BNP Paribas and looks at autos. Kumar, thank you very much for being with us. So we've been pouring through the headline numbers, and what caught my eye was two numbers. One is Eicher Motors in two-wheelers, and one was obviously Mahindra and Mahindra. Let's start with the four-wheeler space first. X of Mahindra and Mahindra, when you look at Hyundai's numbers, Tata Motors, Maruti, I mean, these companies are in serious pain. Do you see any light at the end of at the end of the tunnel?
Hi, good morning, Surabhi, and thank you for having me on the show. For passenger vehicle, the growth has been quite tepid actually for many of the companies. It's been a decline. And that's partly a reflection of the affordability issue. Post-COVID, the affordability of passenger vehicle has materially come down. The prices have gone up for various reasons, including commodity prices and the emission norm changes, and also a lot of premiumization which has happened. But the income growth hasn't caught up to that, and that is something which is showing up on the weak growth which we are hopeful that as we go into the next financial year, and especially in the second half of the next financial year, a lot of this will start coming into the base and we should start seeing some recovery on the growth numbers. But that being said, as of now, definitely outside of Mahindra and Mahindra, we definitely see growth not being around for most of the companies.
That's interesting. Affordability issue, one would imagine it would be for everyone, but M&M's done something right. Coming at the price points they're coming, they've still managed to do so well through this entire phase, right? So Kumar, in the four-wheeler space, what stocks do you like, if any?
The top picks are Mahindra and Mahindra, obviously, and Maruti Suzuki. Mahindra more for the next 1 year. We continue to see these growth momentum to continue for the company. We think Mahindra would be one of the fastest growing automotive company next financial year as well in FY26. They would be in FY25, but in FY26 as well. And the second reason is because of the model launches which they have done. Some of them are yet to come into the base, and hence we'll continue to see strong contribution. That is Mahindra 3XO, Thar Rocks. They have been launched later part of the last financial year, so we will continue to see some incremental growth because of them. And also their new BEV models, the EV models which they have recently launched, they will start contributing to volume. So all of that put together, we see a good visibility on the volume growth of the automotive business. Their farm equipment business, the tractors also are reporting pretty solid growth. They have been gaining market share in a market which historically haven't seen dramatic market share movement. They have started entering into the lower horsepower segment, which is helping them to some extent. And hence their second part of the business, which is tractor, also seems to be doing pretty well, and hence seems to be well placed on both the businesses. Maruti Suzuki, more for a longer term catalyst, we see them continue to deliver very solid growth in the export market. In the domestic market, we believe that while the entry segment is struggling, at some stage, once they start rolling out their series hybrid technology models, that should start helping them revive their volume growth in the entry segment, and that would start helping them.
Kumar, just to clarify, just that point you said, M&M should be the fastest growing automaker. Are you saying this calendar year or FY26?
FY26.
FY26. And clearly you're not perturbed about this whole Tesla business, right? Which led to this 15% drop in the stock.
We are not, actually. If you look at above 20 lakh price point in India, we do have sizable volume. About 1 million units, we estimate, is the market volume above 20 lakh price point. But the challenge with the largest EV maker is that most of their products currently are at a price point which is way above that, close to 40 lakh if we include, above 40 lakh if we include the customs duty, even the reduced custom duty. And hence they would need a much lower price model, which we don't have any clear visibility on that they are going to make a lower price model. And in the absence of that, it doesn't make sense to have a local manufacturing, because to have a plant, any OEM would want to have a clear visibility out to about 200,000 units of local volume. And if we don't have that without a model priced at $25,000, below $30,000 price point, it is difficult to justify a local plant. And in absence of a local plant, a price point that low, it's difficult to see material disruption from any newcomer.
Slightly offbeat question, Kumar. Morning, Prashant here. Usually, we ask whether there's a wealth impact going to come through because the stock markets have corrected. I mean, it's not a small segment now, right? 12 crore demat accounts, I think unique, right? So, and portfolios, etc., have taken a hit. On the premium end for vehicles, and that's where the excitement about players like M&M, etc., come through. Do you think, I mean, I know there's no way to estimate, but do you think that will be a factor if markets don't recover?
Hi, Prashant. Morning. That's a very fair point, actually. That is something which we are also concerned and closely tracking. Pre-COVID, actually, there used to be some correlation between how the market used to do and how some of the wholesale volumes of some of the leading automakers used to perform on the passenger vehicle side. Post-COVID, a lot of data have broken their correlation. So that is something which we don't know how is going to play out, but that is something definitely one needs to closely watch out for. On top of that, there is a pain in the financing market as well. Many of the NBFCs and MFIs are pulling back their financing given the quality concerns and also the funding cost issues. And that will also have an impact on the rest of the automotive market, especially the two-wheeler, which we haven't discussed so far on but we are seeing a material impact of financing pain translating into the slowdown in the two-wheeler industry. So some of these broader macro factors have started impacting the market and can potentially impact and needs to be closely watched for.
You know, coming exactly to that, Kumar, let's talk about two-wheelers. We're just seeing the Bajaj numbers flash on the screen as we're speaking to you. And sales are down. Sales are down about 11%. Hero sales are down. TVS, I think, is sluggish, just about 3% growth overall. But Eicher has done really well. So what's going on with two-wheelers? Again, Eicher seems to be ending a sort of, long period of underperformance. And Bajaj has been the ringleader, but, and now this decline. What do you make of the drop that Hero and Bajaj have seen in February?
Yes, Survi. So I was on your show a few months back, and we were discussing this, that how financing is going to start impacting the two-wheeler market. If you look at the captive financing arm of many of these two-wheeler companies of Hero, which is Hero FinCorp, they reported a loss in December quarter. Their credit cost has been going up and it still remains elevated. The funding cost had also gone up. If you look at the TVS credit, their AUM growth has dramatically slowed down just to about 7% from what used to be more than 20% just a couple of quarters back. And their credit cost also is quite elevated. So there is a pain in terms of delinquencies for the two-wheeler customers. Possibly they aggressively funded many of the two-wheeler customers, which is now starting to reflect in the credit quality. And that is not just restricted to these captive financing arms. You pick some of the NBFCs as well and look at their credit cost, that has also started going up. And finally, MFIs, if you look at the pain which is there in the MFI industry, one could argue that these MFIs are not directly funding the two-wheeler purchase, but the states where MFIs are the biggest, such as Bihar, UP, Tamil Nadu, Karnataka, West Bengal, the top 5 states, where the MFIs have the largest presence and the AUM growth has dramatically slowed down. The disbursement has significantly come down. The two-wheeler growth also has dramatically slowed down by 15 to 30% sort of a slowdown, percentage points slowdown within a quarter. So there is definitely some linkages in this slowing down of the financing and which is impacting the two-wheeler demand, and which is what is reflecting in some of the numbers which you spoke about. In terms of Eicher, they are not as much dependent on the NBFC and captive financing as much as some of the other two-wheeler companies are. They are more closer to the passenger vehicle industry in terms of their demography and the customer profiling, more dependent on bank financing than NBFCs. And hence, they haven't seen the kind of impact that the rest of the two-wheeler industries have seen. On top of that, they have also pivoted in terms of strategy, focusing more on growth, doing a lot of channel activation, and readjusting their price points. That is something which is also helping the company and decoupling from how the rest of the two-wheeler industries is doing.
All right. Kumar, we'll chat again. Thank you very much for joining us.